don't leave. It's not the end of the stream. We've got another segment coming. But yeah, have a great rest of the day. I'll speak to you all very soon. See you in a bit.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey everybody, happy Thursday. Welcome back. Just checking out a couple of things this morning. So we did have some earnings this week on Home Depot. I had some earnings that I played on Home Depot as well as Alibaba. This morning we opened up, this is today's candle. So we opened up around 362, spiked up around 365, and then it faded a little bit. It looks like HD is going to be fading pretty hard. I have an expiration out tomorrow. So unless we stabilize here, I think I'm just going to take a small loss. I mean, my max loss is $5. Which means I'll lose about $1.35, but I'm gonna get out right now around 425. I'm gonna go ahead and just close this one out, take the small like 60-cent loss and just get out of the trade. So just give me a minute to do some management. I'll go through lots of charts this morning: dollar, gold, silver, Bitcoin, the indexes. We came right up to my level. I had a marked call level around 550 that hit for some profit this morning, which was good. I'm watching closely. I don't think the gap's gonna fill necessarily today, but I just pulled out a quick like $50 out of that strangle trade because price didn't go anywhere for the first 20 30 minutes. That was an easy trade, 930 to 951. Grabbed a few profits there. So let me do some management here as we're watching price quickly, and here is what I'm paying attention to. So we came right up to the 550. This is a big gamble level that I saw from yesterday. If we just stay here and kind of oscillate for the day right around that 550 handle, that's fine. I have a new one that popped up here for 555, which would bring us right back into Thursday's sell-off point on August 1st. That was the day after FOMC. So we will see what the market gives us today. Like I said, I don't think the probability is going to be filling the gap today, but we might have some price action that maybe chops around. I think the bulls might struggle at this point. We've gone up over $20 on the SPY this week. So if you look at what just happened, we had 3 weeks of selling and we just had 2 weeks of ripping. Now it's not to all-time highs, it's not back to the lows, but we have had a crazy recovery. The news couldn't have come out any better today. But I want to put some real metrics behind the numbers. With inflation adjusted retail sales, we're still actually down, but that's not what people are pricing in today because we saw unemployment claims come down lower. We saw the retail sales were higher, core retail sales higher. So the market took it in stride with PPI and CPI, and everything looks pretty darn good. So anyway, I need to do some quick management here on HD. So let me close out this trade. I'm just going to take the small loss. Let's try to get 415 or less. If 420 hopefully is the max there, but 415, let's try to close it. Filled at 415. Okay, good. HD 1, 2, 3, 4. 415. Let's try it again. Awesome. Filled at 408, even better. So small loss. All right, just give me about 60 seconds to take care of these trades. Let's try 415 on this one. 404. Okay, very small loss. 1, 2, 3, 4. Is HD like ripping up or something? No, not really. Well, I'm just taking a super small loss now. Let's go 390. You're not going to fill at 390, you dirty dog. Now it's back to 412. All right. These prices are a little wide. Filled at $4. Okay, small loss there. 151. 1, 2, 3, 4. $4 filled. All right, 2 more. And last one. 1, 2, 3, 4. Okay, so net, I took about a 30 to 35 cent loss on that credit spread. That's fine. The next one I played for earnings this week was Alibaba. If I just go in, so on my chart here, I'm going to 0 day or days to expiration. So right now on expiration PayPal, this is a 55 by 52. That's going to be a little ratio spread. That should have paid me some credit. Okay, so that's $1.64 credit in total. That'll be fine. SMCI, this one would be profit today. This is up Broken Wing Butterfly. Should have collected over $1 here, so that is nice little profit for about $210. Very nice. So I'll have a win on SMCI that expires tomorrow, but looking good. There's a 99.5% chance that it stays where it is for $400. Very nice. Pfizer, if I can get up to $29, I'm going to get it called away for over $1,000 tomorrow. Actually, no, that's out to next week, so I still have a week on Pfizer. Never mind. Let's go DTE. All right, so this 0 DTE, or 1 DTE rather, PayPal SMCI. So SMCI should be profit by tomorrow. Pfizer next week. I do have some pin prices on the RUT. So this Broken Wing Butterfly for next Friday and the Broken Wing Butterfly here for the Friday after that. I'm trying to pin this at 2050 and 2100 for a 10x return. If I get lucky on that, great. If I just keep my credits above those prices, that's about $2.50 credit. That'd be about $500 profit. So just watching that one closely. And then SPX, have some trades. Have a Broken Wing Butterfly near the highs. Yeah, I mean, I got filled on all of those near the highs. So Frank and I talked about this right now on the, let's go to the SPY. Okay. Crimson says, I like 0 DT, more predictable. I don't know if it's predictable. It's efficient. I'll say that. It is efficient. Look, it's a crash course in options. If you look at studies, I hope you understand this. The difference between a 0 DTE and 45 or 60 DTE, the amount of time that can work in your favor and the amount of credit you can collect is way more fair, and way less risk if you go out a little bit further. So tons of studies, but if you just go to Tasty Live, for example, the studies that they do every single day, they will show you with definitive and empirical evidence that all you have to do is go out like 45 to 60 days, be an option seller, you can make a lot of money. But in the 0 DT market, look, it's fast paced, it's aggressive, but you have about 10 times more risk as far as how the options prices are sensitive. So it's not a bad thing. If you're right and you win with 0 DT, great. You can make a lot of money and you can actually, net more credits through the short term, but you got to be right a lot. So anyway, I love it. I use it a lot. It's great on the it's great in the bigger picture where, things have been pretty stable. The reason we've had this big stretch, if you've been seeing the markets, like, hey, we've been, 400 trading days before we had a 2% pullback. Well, the reason a lot of that happened is because we've had 2 years of 0 DTE. And it has added, 45 to 50% more volume into the markets where now a lot of stock options that are expiring on Fridays have heavy 0 DTE trades. The SPX, the SPY, the QQQ, the NDX, like all these indexes now with 0 DTE, it adds this layer of efficiency and hedging where market makers and institutions, hedge funds, retail traders, there's lots and lots of volume happening. And so it does keep the market quite stable, which is kind of nice. Now, it doesn't mean it's perfect because there was an interesting, I listened to this podcast last night that when we saw this crash on Monday morning last week after having that Thursday, Friday sell-off, the amount of 0 DTE volume was sitting at the same lows we saw back in like 2020. It was like a holiday during I think Christmas of 2022. It was this weird thing where like we had these big blips in the market, and it was because the 0 DT volume was really, really low. So look, 0 DT is great and it's here to stay. I think it's just interesting that everyone's been talking about it. Look, oh, it's going to break the market. It's actually helped stabilizing the market. So I don't know, just food for thought. All right. So let's do a little top down here. So we are sitting at 550. Here's the SPY at 549. I did take a call option. It's for tomorrow's expiration. Here's a 555 sitting right here. It was really cheap. I paid 47 cents for a call option. If we see that, today is not done and it's closed yesterday, open today, if this market's at all excited about getting any higher, whether it's today or tomorrow to finish off the week, I'm going to go after a little out of the money credit spread, or I'm sorry, out of the money long call, and see if I can turn, maybe a 47-cent credit into, I don't know, 80 to 90 cents, maybe a dollar. If I can turn it into a dollar by tomorrow, I'd be pretty happy with that overall. So that's a little trade that I added in. I've got some levels on my SPY. I've got some vol plays out through end of this month in September. I just showed you those, the expirations I have for tomorrow. So SMCI should be a good profit for everybody. That should be looking favorable for everyone. If I take all the accounts out here, go to SMCI, where are we at? Let's go symbol. So SMCI is up about $2,800. That's going to be expiring tomorrow. SLV is up around 30 grand. That's good. MO is still doing pretty well. We're up to 5068. MO's up $74,000. So there's some big winners out here. WBA, that's a drawdown I'm in with Walgreens, but that's a dividend stock. Yum Brands hanging in there. Under Armour, I've got some nice profits running on Under Armour. I own that thing around like $5. With options, I've lowered the cost base even more. That's probably the closest stock I have to owning at zero. I added a lot of options over the last couple of years. Selling covered calls, adding credit spreads, generating some income, lowering the cost basis. I think my cost basis on Under Armour is like under $4 right now. So I'm just going to hang on to it. I like Under Armour to the upside if we get into this mid range. So we've had a nice little push post earnings. We have a range. Let's go back to the daily time frame here. Let's see. I like this like $10 to $11 zone. There's a big gap fill here around 11 or 12 bucks on Under Armour. I'm not looking at some massive profit potential other than getting back to maybe $10, $11, and then with this break even, like I said, I can look back at my history. I've used a lot of call options to lower my cost basis down when we hit this same low. Lots of credit spreads in here that generated some income over the last couple of years since we had our low back in 2020. I bought the shares back down here equal lows around $6 and change, and then just use some options to let them go. So anyway, my price target's like $10 to $11. I'll let it go for there. All right, so let's go SPX. I'm going to try to keep the charts really clean. I know that they are getting messier, but this is probably the simplest chart I can give you. Okay, what you're looking at right here, the shaded zones are the weekly candles. So this is a green week from last week, a green week thus far for this week, and we're still hanging out at 550 today on the SPY. Look, this is last Thursday's sell-off. Okay, so we had FOMC with a gap higher, and price was up on the day with FOMC, even through the press conference with Powell. Thursday, the market unwound. Friday, the market gapped lower, and we had the SOM rule triggered. And then Monday was our crazy sell-off and open, and it was an immediate buying opportunity. Now, all this being said, if you're looking at the VIX right now, the VIX is down to like freaking 15. We went from 65 to 15, just a crazy vol crush in the market. I mean, the IV on the indexes was up to like 150 on my IV ranking, and now they're down to 19. So we've seen this huge swell in IV that just went back to right where it started. So as a option seller, that is what you want to see. Okay. As we're looking at prices now, okay, I do think with the gap today that this gap is potentially vulnerable. I think this gap is vulnerable. I don't know if the market's going to come back and test all-time highs, but I will say that if we can, I'll say this. How many of you out there just give me like can we do a poll in here, by the way? Can I actually put a poll in this chat? I was going to ask how many of you are more bullish or bearish, or let me pose this question. Just type it in. Type in top if you think this market is going to retest the top first, or type in bottom if you think this market is going to retest the bottom. What do you think is more probable right now? I'm just curious on, public sentiment out there. What are traders looking at? We've obviously had a great recovery, but we're still from this high to low swing. We're pulling back right around that 50 to 60% window. So there's still some more legs to the upside that the bulls are going to have to, pull up the pants a little bit and figure out if they can keep grinding higher and take out that Thursday sell-off. Okay, I see top. Okay, I see a bottom. All right. And as I expected, this is what makes a market, right? We don't have, full on 100% consensus. And if we did, I'd be a contrarian. So if everyone's saying top, then that means I'm probably going to short it. So I'm using this as an instrument to what I want to do moving forward. I'm just kidding. But no, in all seriousness, so top or bottom, look, it's tough. We're kind of right in this with this window of like the market can just keep going up. I think it's pretty fair to say that the market is now shrugging off what we saw last week, like very easily shrugging off what we saw last week, because Thursday, Friday, Monday, the 5th, shrugged it right off with, last week rallied, this week rallied, and here we are coming right back to where it all started. So it doesn't mean that we're done, but I will say that if you are going to be a seller, if you're going to be a full-on seller in this market and think that we're going to come back and retest the low, there's no reason to be a seller right now unless we break below 535 or 530. The bears are going to have to break through that level if we're going to have a decent look to retest the lows. Otherwise, we might just go sideways for a little bit. I don't think that the trajectory we're on and as aggressively we come back, we're missing some catalysts over the next couple weeks, because all we have now is Jackson Hole, right? So let me make a list here through the end of August. I did this with my traders this morning. So we have a remainder of August, okay, and then we'll go into September. And I'm going to do this from memory, but I might consult the FX calendar if I have to. So the remainder of August. So earnings season is done. So Q2 earnings wrap up. We're like way light on the calendar. We've gone through Mag 7, which is really kind of all that matters. But Mag 7 didn't save the market. It didn't save the market like it did back in May. This time it was just better employment data and better CPI, better PPI. So earnings wrap up. It's kind of done. We just did, PPI, CPI, and we had core retail sales. And we had retail sales this week. Okay. Before we get to the end of the month, we do have Jackson Hole. This is August 22nd to the 24th, which is going to be a Thursday through Saturday. So that potentially leaves some headlines to be read on Thursday and Friday. We also have core PCE end of month. Okay. So before we are done with August, we still have a couple of talking points here. Earnings is pretty much wrapped up. We still have Jackson Hole, which Jackson Hole might be addressing, tensions in the Middle East. It might be addressing other things. I don't know if it's going to be about inflation or monetary policy. You never know. But Jackson Hole is notoriously volatile because it is still a thin market. Like August is typically a lower volume month, and so Jackson Hole can be pretty disruptive when it comes to some intraday price action for a couple of days. Last year. One more thing before the end of the month, we also have NVIDIA earnings. So I guess we technically still have a Mag 7 left. This is going to be August 28th. So before the end of the month, I would say this: all these things need to be good for this market. For all you that said tops, all these things need to be good. Okay. Meaning Jackson Hole needs to be optimistic, meaning that core PCE needs to be lower than expected and having a better print so it comes in line with the PPI, CPI, so it's better inflation data. And then NVIDIA earnings needs to pop. And NVIDIA earnings have been like priced to perfection and probably still are priced to perfection. And we will see. Is NVIDIA enough to like give this market that extra boost that it needs with everything else being optimized? So all this has to go well for, I think, the top to be reached. Even if we have the top, yeah, you're right. Wednesday before Jackson Hole, you are correct. It's minutes, so it's not the same as like a Fed, rate decision and press conference, but you are correct. We do have FOMC minutes. And that's next week, right? Yeah, that's next week, Wednesday. So I think all these things have to go really, really well. If they don't, well, we have some gaps to fill. We have some bearishness that could be kicking in here. We could have a bit of an unraveling, unwinding, just a reality check. That's essentially what this was. This fall was a reality check, and I think that it could happen again. Do I expect it to be the same type of vol that we had, in 3 days? Probably not. But that's why I'm saying on this chart, if we break below this 530 level, okay, 535 to 530, we break this trend line. To me, this is a lot easier to justify being short, trying to get back to the same lows. Okay. If we go lower, then we still have a high-low swing, lower high to lower low. Maybe it is slightly lower, but think about the sentiment swings this market would experience if we go from high to low, 10% correction. We pull back 7+% of that correction, and then somehow we end up at lower lows. You know how much damage that's going to do to the bulls? That's going to make this high seem like it's going to be the Sisyphus test. Is that the Greek tragedy where the guy just pushes a rock up the mountain forever? That's for eternity. I just think the all-time highs are going to be farther and farther away if we take out these lows. Right. All right. So we get to the end of this month. These all have to be keeping optimism there, looking pretty good. NVIDIA's kind of price perfection. Core PC has to come in solid. We go to September. Okay. September, we have, this is all prior to the FOMC rate decision on the 18th. We have non-farm, which will come in with jobs numbers, right? Jobs numbers. Then we're going to have average earnings, and we're going to have unemployment rate. So that's all through non-farm. We are going to see another round of CPI and PPI, which they switched at this time. So in September, it's going to be a Tuesday PPI, or I'm sorry, it's like a Tuesday or Wednesday CPI, and then the next day is PPI. So for whatever reason, it switched around. But we have more inflation data in September. And then I think we have GDP for the US as well. We'll have retail sales, I'm pretty sure. We'll also have unemployment claims. Every Thursday we have unemployment claims. And then we'll have the FOMC on September 18th. Okay? So this is actually a decent amount of data that the market will be digesting until we officially have the Fed rate decision. Now, if you watch the CME Watch tool, this Fed Watch tool, the probability is getting higher and higher that the Fed is only going to be cutting 25 basis points. Again, another thing that changed wildly over the last couple of weeks. Where's the emergency rate cut? Where's the Fed's going to step in? They should be cutting 75 basis points. Oh my gosh, we're going to be in recession. Now, just seems pretty calm out there. Fed's doing what they said. They'll cut 25 basis points. It'll be a test cut. Now, if we cut 25, 25, 25, that puts us at 75 bips or 0.75% by the end of the year. And then if we cut 1, 2, 3, 4, 5, 6 times going into 2025, that total, okay, if this is all 25 basis points each, that total is going to be 2.25%. And if we're currently sitting at 5.25, 5.5, that brings us down to 3 to 3.25. Okay. Now, interesting that we'd stay here. If we still see inflation at 2.9% and our Fed restrictive rate is at 3%, you can see that the Fed still wants to see inflation data improving, right? I think that all this cut could definitely pause and hesitate if we see an uptick in inflation of, let's say, year over year gets back to 3.4, gets back to 3.5. The Fed is not going to be cutting. I don't think the Fed would be cutting to then see their rates getting underneath or lower than the actual year over year CPI print. So this is all, 12 to 16 months away. But as the Fed's cutting, they are expecting to see there's still a slowdown out there. There's still some bubbles under the hood. So again, all this is being digested, but you can clearly see there's been a big sentiment shift the last couple of weeks. Full on panic to recession scares to now, okay, the Fed's going to cut 25 basis points, off we go. But like I say back in the chart here, I think all these things have to go pretty darn well for us to be hitting the top. Okay. In fact, I would even say this. If we do hit the top, okay, if we do hit the top, doesn't mean I want to sell it, but I would be more interested in a failure at that top, looking for this to maybe be a range. One thing we haven't had in 5 years is a range. Okay. In fact, it's been longer than that. The last time we had a sideways move in the market, it was 2015 and 16. And then late 2016 and 17, we started to break. 2017 was an eerily bullish year. 2017 to 18, we had a vol event. 2018 to 19, we got back to the highs. 2018, we crashed again. 2019, we recovered. 2019 into 2020, we crashed again. That's where we have this big broadening pattern. Like, it's been crazy since 2018. Once we had that vol event in 2018, this market has been a series of booms and busts. And the last time we've had a range, it was 2015 and 16. So we're almost a decade away from having some type of range. So could I see a 10% range on the S&P? Sure. So do we find a way to get up here? Yeah, maybe. But then from there, is it easy to, sell off? And it's never easy. But if we carve out a top, I'd like to see it hold. So the trades that I put in. So Frank, if you're watching, I did get filled on my broken wing butterfly here. I got filled for $1.50 out of a $5 butterfly. So I don't have a ton of risk on the trade, but I'm looking for a profit trap. I think I did this out to the end of the month. Let me check on that. It was an SPX butterfly. Let me check here. SPX, August 23rd. Let me check the highs. You know what? I got filled on this broken wing. That broken wing at the highs. I also put one up here that I can take a look at today. Let me check those. So August 23rd. Let me just check one account to simplify this. There we go. So I've got a broken wing on the 23rd with a pin price of 55.65, which is the Thursday sell-off. And then I have a September one at the all-time highs. The September one was filled for $1.50. So I do have some credit on these. They're all, it's a 10-point wide. So, I mean, I've got some risk, but with the credits collected, I've got about a $3.50 risk. So it's defined. It's fine. I do have a profit trap that would pay about 10x. If I'm right at expiration, that'd be pinning the price. That's super lucky. But it's there. And if not, and price actually rejects off these levels, then, I'll just make the credit as is with the tail credit at $1.50 each. So anyway, all right, back to my thoughts. Does this make sense? Okay. So for those you saying top, those you saying bottom, look, both of you could be right. I don't know which is going to get tested. I truly don't. But I will say that right now, if this market just shrugs off what just happened the last couple of weeks, I think everything else that comes in has to be pretty darn perfect for this market optimism to continue the way that it's been continuing the last 2 weeks. I really do. And if we do get back to the tops, I am a little skeptical of this market blowing through these highs and going much, much, much higher. Okay. So just giving you some updates on where we're at. We still have some news to get through by the end of the month. If it's not perfect, I think this market's going to finally show a little bit of a downward movement that we haven't seen since Monday of last week, right? We opened at the low and we've been ripping every day since. So we do have some news to get through for the rest of this month. We kick off September. We have a decent amount to get through as well. That's all pretty critical news. Non-farm, you can see the market's sensitive to job numbers right now. CPI, PPI, like we saw this week, came in better than expected. GDP for the U.S., retail sales for the U.S., unemployment claims as steady, Thursday prints, and then we get into the FOMC with the old rate decision that has been highly, highly, highly anticipated and all over the place, right? This was supposed to happen back in March of 2024. Now it's September, right? So what a crazy difference. And like I said, the reality is the Fed said they're going to cut probably 2 to 3 times this year. And if they cut September, November, December, there's your 2 to 3 cuts. 2025 is going to be the interesting one of how much more consistent they are with cutting every month or cutting every meeting or cutting every quarter. So it will be something we have to keep an eye on. But I do think that it's going to be challenging. If we get to the top, I think it's going to be challenging to blow through that top. Just my thoughts. Okay. All right. So I'll wrap it up on that note. For the new stuff, let's talk charts. If you are a buyer, then this has been a great couple of weeks for you. And there's really nothing else to be said. If you've been buying, you had the dry powder here to buy. We had some opportunity to get through this awful crash we saw and that vol event, but it's been pretty steady ever since. And today, 550 was hit. That was my target. I've got a 555. If we have another big stretch tomorrow, we're coming right back into these highs. We'll see what happens. So I'll keep an eye on that one for the rest of the day and tomorrow. The bears, like I said, to really have bearish confirmation. I'm not sure what these lines are for, but I'm going to take those out. For me, the bears would have to take out 530. So I'm going to put a chart line right here. If the bears take out this 530 level, I'll make this red. Okay, if the bears take out that low, and I'll probably watch the trend line, but right there to me that's where the structure is. I think that's where there's going to be more of like the waterfall effect of like more piling on for shorts and covering losses and buying shares and getting out of puts and things like that. But until then, we have trend line support right now, and the bulls are way ahead of the game. All right. But we do have a couple of gap fills that make me a little concerned if we're struggling at the same high that we sold off from on Thursday. All right, that's the SPY. Qs, same type of thing. Okay, so take a look at this. There's the trend line that would have to break. The bears would have to take out 448. So put in another line here. If the bears take out 440, it's almost 449, but I'll put it right below that level. If the bears take out that level, we have our Thursday sell-off that's right within reach, within a couple of points here. 475 is that Thursday top from post FOMC. And the highs are a little bit farther away, right? The SPY is come back because we only had a 10% dip. The Qs have rallied a decent amount, but this was a 20% drop. So we're not even, we're right around the halfway point of the Qs. So there's still a lot more upside to be had here. And I'm not saying that we can't get there, but I could see some hesitation. All right. NDX, same thing. We got some gaps to fill. There's my trend line. SPX, same thing. Gaps to fill. There's a trend line. So I'm just going to keep an eye on this, try to keep the charts very, very clean. The Dow looking a little bit better. This one is probably more the more resilient of the indexes. The Russell, trading up today with a big gap at 211. It's nice to see there's a bit of a broadening here where we've come in off those lows. My RTY positions, my RUT positions looking good. So I've got some broken wings in here that I needed to stay above 21 or 2050. Those should be looking much better right now. If I go to the charts here, let me go to RUT. So I've got this is a broken wing for next Friday, and then this is a broken wing for the end of the month. So watching those to see if we can stay above 2050 or 2100. I will be watching to see if I can get a lucky on a pin price as well. I'd love to see prices kind of hanging out in these gap levels. Also with tomorrow's expiration, it's a Friday expiration, it's a monthly expiration, so we may see some pin prices here. Frank, what's up, dude?
Hey, Chris. I'm doing good. How are you?
Good,
How
man.
are your trades?
Trades are good. Trades are fine. How's your you did a 450 by 457? Did you take? You got to be taking full profit on that now, or close to it, right?
I am. I'm pretty close. I'm at 80%.
Nice.
I'm monitoring it, but I think I might ride it out. Try to close out tomorrow for at least 95 or something.
Okay.
Because it's at 457. We gapped up this morning, opened at 468. So we'd have a lot of ground to cover if the price wanted to come down and cause me to stop out or something. But
right. So you because you'd have to drop all the way to 457, correct?
Right, which I don't think is going to happen on what numbers have come out this week.
Sure. It'd be pretty stable. It'd be pretty stable. And tomorrow too, I think there's a reason that this market might be gunning for this same level, because that's when all the drama happened. All the drama happened last that August 1st Thursday when the market dumped after FOMC. That was really where all the market started to kind of lose its traction. Right? Thursday was nasty. Friday was the SOM rule. Monday was the open. Like, we're never going to. I certainly won't forget it. But I could see the market coming back to that level and saying, okay, now are the bulls able to keep going, or are the bears going to have their reckoning? But for you to be at 457, we'd have to dump over 3% in a day, because your expiration is tomorrow, correct?
That's right. Yeah, I don't think that's necessarily going to happen. We don't have any more news this week.
Agreed.
I think if anything, we just kind of stay where we're at. Although, I mean, today we're up almost 2% again. I just think
I know, man. The gaps are almost 1%, dude.
Unemployment claims have been just very sensitive, I guess. So,
yeah, I mean, the market's taking whatever it can get. That's pretty much what I determined. It's like I posted in my Discord this morning. Market's going to ask for better news. Retail sales came in, 1% versus 0.4. Core retail sales 0.4 versus 0.1. Unemployment claims again 227 versus 236. The futures market, if you look at ES this morning, this thing jumped right on the news. Currency strength right out of the gate. As soon as the news came out, JPY sinks, the Swiss sinks, Aussie's up. The dollar had an interesting pop this morning, which I thought was something to consider. I still, on my dollar news, well, what is this gap on the day? So we gapped up 1.27% on the Qs. We gapped up nearly 1% on the S&P. Just crazy, man. Like this market loves itself. It's amazing. It really is. Like, forget about it. Never happened. What vol event,
If it wants to go back up to the highs, and so be it. I am
sure.
At this point, now that all the news is out of the way, I don't think I'm going to buy another out of the money put for tomorrow. I've so this trade was this trade would be about $300 something, and I've spent, I want to say like 20, 30, or $40 on these out of the money puts in total.
Nice.
So I think I'm going to be done and then just take the gains that I have already.
Sure. Yeah.
But yeah, after today, I don't see any real reason why we should come back lower tomorrow. So probably just going to, stay out of the puts for now.
Yeah.
And maybe look next week. We have something. I know it was something big. We have PMI, I think. Next week is PMI. That's big. FOMC meeting minutes.
Jackson Hole next week too. That's the big one I'm looking at for next week.
Or Jackson Hole on Friday.
Thursday, Friday. PMI for Eurozone and US, right? Yep. And then Jackson Hole starts Thursday. So CPI's out of the CAD. So most of we have meeting minutes on Wednesday, Jackson Hole Thursday, Friday, PMI on Thursday as well. So it's kind of a backloaded week from like Wednesday meeting minutes to Thursday, Friday, Jackson Hole, which Jackson Hole is very difficult to trade. It's a weird like price action day. But the nice thing this time for Jackson Hole is NVIDIA earnings aren't at the same time. Last year at Jackson Hole was a freaking mess. Let me try to find it. Let me see if I can look at a date here. I just want to go back as a reference. If I go to NVIDIA, actually, let's go Jackson Hole 2023 dates. I want to find out what it was like. It was a wild 2 days, man. Summer, fall 2023. That can't be right. Jackson Hole Symposium. So was that it? August 24th. Okay, so that would have been
that day though. Was it just extremely volatile?
Dude, it was like, I mean, it was huge moves that ended up going nowhere. It was just, and we had NVIDIA earnings on top of that. So we had like this, we had one of the biggest post-market gaps in an index. It was like a 2.5 to 3% gap higher post-market because of NVIDIA, and it came just crashing back down the next day. So it was just like a weird, like it crashed lower, ripped higher, crashed higher, ripped lower, and all this happened within a couple of days. And I was like, what the heck, man? But August is also like this, summer month. It's still like kind of vacation-y, a little light on volume. So if this is correct, August 24th to the 26th of last year, I just want to go to the SPY really quickly and go back to that date. So let's go 2023 in August. August 2023. It's probably going to look like, what are you even talking about, drama? It's probably right in here. So 14th. All right, let's zoom in. It's going to be right in here. Let's go to the daily.
Yeah,
and it's like it maybe it's in my head was way more dramatic than it really was. But here's 2022. Here's 2023. All right, so the 24th. So August 24th. Here it is. Okay, so this was it. Here's your 23rd. So the market, finds a low. 23rd, rips up here. This was Jackson Hole. So we go from a gap higher, and again, I look at this and it's like it doesn't really show the true story from what I experienced last year. But we were up about 0.5% gap up, which was way higher. Like we opened. Post market was like a 2% gap, and then we just ripped to the downside. This candle from high to low on just a daily candle was a 1.87% drop to the downside, which at that time was pretty meaningful because we were going in this kind of low volatility world. And then we had this, just ugly indecision candle. I don't know. I guess I'm making a bigger deal out of it, but I can tell you that around this earnings print with NVIDIA at the same time as Jackson Hole, it was a lot more volatility that seemed unnecessary at the time. When the dust settled, it is what it is. But we were still in that kind of weird summer correction where August didn't really save the market. We still had a downturn in September. And on that note, I mean, that's why I asked earlier this morning, Frank, how many people think we're going to retest the high? And look, we still have 2 of the worst months moving forward, right? If you go to our seasonality for Edgefinder, September, October are 2 of the worst months in the markets. So if we go to S&P, So right now, August is essentially flat. September, October are two of the worst performing months, and I would be shocked to see a positive September coming out of this month that just kind of saved itself. Like August, in what, 3 days of trading, we had August 1st was Thursday, which was a terrible day. August 2nd was Friday, which was non-farm. That was a terrible day. August 5th was Monday, which was the crash. August was in a huge hole just because of those 3 trading days, and we've just essentially washed it away. Over the last 2 weeks of trading now, we've washed away that nasty spill, but we still have 2 rough months to get out of this, funk. So,
I mean, I
question,
would say in the next 30 days,
uh-huh.
if the market isn't at the highs, then I don't know. Because then we'll be in the middle of September. That's usually when I would say mid-September to early October is when the worst of it happens. Because usually you get that rally towards the end of October, and then November ends up being a great month.
Right.
So I'm thinking, I guess in a month's time from now, we're at August 15th. So we got 30 days of, can we get back to the highs? If we do, I would feel comfortable taking a short. I would probably still play cautiously bullish,
Mhm.
but from now until then, I think there isn't much to tell us that, okay, we need to look for downside. I think
Yeah.
I think
Look,
we have a little bit of time to keep going higher.
my downside would be here, dude. We either have a move back down into obvious down confirmation, or we get back to these highs, and I just don't really believe that. And look, I'm not going to short the market on freaking margin. I'm just going to take option trades and try to take some bear call spreads and make a few
Yeah.
bucks. So it's not like I'm not betting the farm. I'm just saying that right now the bears are absent. The bulls have been in control since this low, and I think a lot of things have to be priced to perfection for good to happen for this market to justify getting to the highs when we're coming into the worst time of the year. Usually August, September, mid-October are when the corrections happen in the stock market. What I think everyone should be hopeful for is that by the time we get through the worst part of the month, typically, is that we're not down to fresh lows. If we're down to fresh lows coming out of October, dude, I'm sorry, man, but all-time highs are going to be further and further and further away that don't look likely by the end of the year or even into Q1 of next year, right?
Right.
So, I mean, I think if traders are lucky, I think we try to sniff out these all-time highs, and then we have some reality where it just doesn't really go higher, and then the market comes back down, and we have a range. I mean, that would be kind of nice. I mean, it's very tradable. If we're at highs, we can trade it. If we're at lows, we can trade it, and then just pick and choose your battles in between. So, again, I don't know. I don't have a crystal ball, but I do think that um, it's going to be interesting as always. But
Well, we're
this this
also
this week has been silly, like silly bullish, just like last week. So, what were you gonna say?
Yeah, I
Sorry.
mean, yeah, I don't necessarily think it has to be perfectly aligned for a bullish market. I think you get any kind of news. You can have everything stacked against the market in the bearish sense, and
It's true.
then you can have a nice unemployment claims or something, and then everyone brings it back up.
Yep.
But right now on the NAS, so we're approaching a major resistance level.
Show
It
me.
served as a double bottom from June to July, and then it served as a top at the beginning of August. We're now
Yes.
approaching it. It's also coupled with the 50-day. So I think this might be more so the decision point than this
Yep.
wedge, because we broke out of the wedge. We're looking good. There's a clear breakout, good bullish trade here. But I think this might be more of this could be like the gate. If we can get through the gate, I think we come back and try to test the highs. But if we don't, if we
Yep.
pull back again, create a double top, and then we just have this, I guess, this area of limbo between the 50 and the 200, which is like 1,000 points or something,
Yeah.
close
That's
to 1,000 points of just range bound markets.
Yep. And that point that you made right there, that's exactly that Thursday sell-off. So that's what I pointed out earlier. I think that is a spot where it's like the market's gonna have to make a decision whether or not it can grind through that. We're certainly making a quick run to it, but if we don't close beyond that, I mean, I'm looking at the Qs, you're looking at the NAS, but it's the same thing. That Thursday sell-off top, Thursday sell-off top. I mean, I'll move my there. So it's right there. Like we're creeping up to it, But yeah, you're spot on, dude. I think that looks really clean as far as if we struggle there, it doesn't necessarily mean that we go bearish, but it's like if we struggle there and we go limbo, I mean, this could be what sets up for a bigger break. I mean, like I said, I don't want to be crazy bearish and actually taking intentional positions unless the market confirms that we're going lower, because we could do this and we could go sideways and we could just be seeing nothing, So
Yeah, even
I
on a
think,
break too. Sometimes like we
yeah.
can break lower and end up making a higher high the next day. So it's
Well,
hard to tell.
I've already kind of hedged myself out to like the end of September, where it's like I put probably 5 trades on at 1/4% each. So I'm about 1 to 1.25% hedged right now in my positions. Now that percent that I'm willing to sacrifice, if they never work out, they never pay me, I'll sacrifice 1 to 1.25%, no big deal. But this is probably about 10% of gains if I get paid on any of them.
Right.
So it's there, but I think what was frustrating me this week is I was really defensive coming into this move, and I had some recoveries. I've had some big P&L swings, back in my favor, which is totally fine. But I did play some more defense, and I think what was annoying this week is I just feel like I just wasted money. I just I just feel like I just put on hedges and I'm like, this stupid market's not going to do anything. But I have to remember that I have expirations out to the end of this month. I have expirations out to the end of September. And so it's not like I'm not looking for instant gratification here. It's like just in case. And that ultimately is what hedging is. It's just in case. I have insurance now. I have a backup plan just in case.
I would not think you're wasting money in this situation because of what we just saw.
Exactly.
I wouldn't be hedging all the time, but it's just
Right.
in this particular market, I didn't expect us to come this far back. But I'm not surprised. So, this is just inviting bigger swings.
Mm-hmm.
And I think if we do get sell-offs, they're going to be very quick, like one day, 2 or 3%. So your out of the money hedges could really pay off, but you'd have to act quickly. Otherwise, we're just likely going to drift higher like this.
Sure.
So
yeah, very true.
I think hedges are important, but at this point in the week, I don't really see taking any more as a good idea.
I'm good, man. I was good. Like I said, 1/4% hedges. I'm good with that. I put on 4 to 5. And there's no reason for me to be with 10x payouts. There's no reason for me to hedge more than like 1%. It's like
Right.
I'll sacrifice that. And usually I mean, I should just do like 1/4 1% and be good. But because it was a little bit of a, an oh crap moment, it's like, well, I need to make sure that if this were to be another vol event where, I mean, the VIX, for example, going from, that's the wrong chart here. Let's go back to the SPY. The VIX going from, I mean, freaking 65 down to 14, dude. Like we're right back lower than where all this drama started in July. This is crazy to me that this market has even sniffed out like, oh, just a little bit more volatility. Nope. It's crushing. Like this vol crush has been one of the most impressive drops I've ever seen. I looked at term structure this morning as well. And now they're looking for slightly higher volatility. Look at this. This is the actual market on term structure looking for higher volatility out the next 30 to 60 days. So we're down to, 14 and change right now, 1481. And this is talking about, through September, October, getting to 16, 17, having some elevated volatility, which I think is interesting. Like it completely flipped, dude. It's wild.
Yeah, it did. I would just wait for that low again, maybe under $11 a share before you look at taking another short or like buying the VIX or something.
That's true.
After that dump, after that 180% spike on the VIX, I bought SPX, which is the short ETF of it. Just because
you bought SPX, okay. SVI, is it VIX?
SVIX, yeah. So in the short term,
yep.
If the VIX did come crumbling down, I mean, this is going to make its way all the way back up. So at the bottom here, it's like 18 something dollars a share.
Yep. If
it comes back up to the highs, which would be like if the S&P or the NAS make it back up to the highs, that's 175% gain.
Wow.
So I feel like this could be a good short-term play, as in like in the next few months.
Yeah.
As I could make 175% on our way back to the highs versus I think it was like a 12% rise on the S&P or something.
For sure, man.
So
did you actually catch it? Did you buy this?
I got it at 23.
That's awesome.
Let me make sure of that though. I got 23.19.
Okay, dude, that's so good. That I was so you played the SVIX. I did the SVXY. I bought this at 40, but I didn't get it in everybody's account, and I just did a bunch of puts. So if I do take any assignment on this, I've got puts in the 50s and a put in the 35s. If I take any ownership, I'll own this thing at like $48. And I was doing the same thing. It's like own it at 48. I bought one at 40, and I'm trying to get back to the highs. Or even if it's this, even if it gets back to like 56, I mean, that's a quick flipperoo for a nice gain that's outperforming, like you said. That recovery in these instruments, it's a bigger gain than what you'd have actually like buying the index. Being 100% invested in the index returns, a tenth of what you get on these like short-term volatility plays.
Yeah.
So good stuff,
The
man.
only issue is that you get another day, like what was it, August 2nd or something.
Yep. The 5th was Monday.
I mean, this could come down back below 20. It could go into the teens. So
For sure.
it's not a safe bet, but it could really pay out in like the next few weeks or the next month or two or whatever.
Yep.
As long as the VIX keeps falling. But I think once the VIX makes another low, which is what I've been looking at, even July 19th, that was like the indicator. We saw here, I need to zoom in. We saw this massive sell-off only to come back up again. I think that was the indicator that the VIX is not going anywhere. And so that was a good spike we saw in the VIX.
Mhm.
And then we see this drift lower. If we go back down to 11 or 10, I would say under $11 is when I would probably look to either get out of SVIX or start buying the VIX again.
For sure.
But yeah, that's basically what I'm doing now, is just cautiously bullish, maybe picking up some volatility trades here and there, but I'm leveraging a lot less now. So I feel like I'm thinking clearer.
Mm-hmm.
But yeah, this week has been good.
Good, man. What did we, when we left off yesterday, what were we in the, do you remember what we were talking about yesterday? You and I talked about some broken wings. I did get filled on the,
Oh yeah, on NDX.
So I got filled on this, on the SPX as well as the NDX. So I've got broken wings here. So this one, as well as this one.
Is this one day or is this?
No. I did these out like, I think I did this out to the 23rd and out to the 30th.
Okay.
So I'm trying to give myself a little bit of time on those. And I think on the NDX, same thing. So it's right here on NDX. Actually, no, NDX, I didn't do the highs, but SPX I did. And then the NDX, I did the high. So I have a 24.25. That's 20,425. That's my pin price. This one I think is out to the end of August or September. Let me confirm that. So let's go NDX here. I have an August. Oh, did not get filled. Filled. There we go. Okay. So, son of a gun. So I got an August 23rd, 19.5, which is, okay. So this one's pending, Frank, at 750. We're trading at, this one might get filled, dude. This is out to next Friday. I told you yesterday, I'm trying to take a third of the width. And so since it's $25 wide, I'm trying to get a third of that filled at 750. I'm still leaving it there pending order. And then I have the one at the top at, this is NDX 21,000, which would be just up a little bit higher than the all-time highs. I'm trying to get that one filled at 5. It's trading at 465. So if we go any higher, I see the mid price at 480, 485. If this gets filled, then I will have that top broken wing as well as the intermediate one broken wing. But I'm trying to get a third of the width. So, that way the defined risk even on a broken wing butterfly is good. So I'm that way it's
can you look out to 0 DTE real quick?
Yeah, for sure.
On NDX.
So look at today?
Yeah.
Okay.
Look at 19,540.
Okay, so we'll go call butterfly 19,540.
That should be the sell leg.
Okay, 19,540, and then just do a typical skip strike. 45 cents. So it's $10. It's a 10 by 20. So you have a $10 bear. It'd be a bull call spread for $10, and then you have the it'd be a bear call spread for $20. So your risk, this is where the NDX is a little worse off than the SPX sometimes, is just the strikes are slightly wider. So you're making 45 cents or 50 cents. You got a profit trap of $1,000, which pays for your max loss, but your max loss will still be risking about $9.50. That's the downside. So if we were to go, how far do we have to go to get to 19,540 from current price? 19,540, not that far. 19.
I say that because that was the high.
Yeah, we'd have to
Thursday.
Only like 0.8% to go higher. Yeah.
But it is just for the end of the day. So
well,
we're
how about
hitting
this,
this.
How about this? Put it again. I don't mind this trade. If I did this for tomorrow, I'm going to take this trade. Again, you're talking. No, I'm just kidding. I like the trade, but I would say if it's $10 wide, if I can get $2.50 for this trade, how do I get that? Well, we're gonna have to see price go a lot higher in order for this premium to get up there. So if I put 250 in here, I'm likely not going to get filled. But if this position is threatened in any way, Frank, like I would be pissed if I took a 45 or 50 cent credit and had this thing actually offer me $2 to $3. Right.
So price will have to go past this spot, right, in order to be 250.
No, it shouldn't. I mean, because right now we're at 380. We'd have to go 160. I mean, if we went up like maybe 100 points or so, we could be close. So if we're at 380, we go to 480. That's the end of the extended move. Let's see what 100 points out looks like. Let me move this strike up a little bit. So let's go to 480 and sell like 100 points out. So you get 220, 225 if you're 100 points out. So, I mean, if I move it down to the 540, so that's the pin price, 540, I'm going to take a number like 550 just to be a little bit safer. And I'm going to put in a trade here for $2. I'll take the trade. Okay. So I'm going to try to get $2. If it fills, great. This is a trade that's going to be done tomorrow. So if it doesn't fill, no big deal. It's done and over with, and I don't get filled on it, but I'm going to take the trade, dude. So I'll give it a chance. See if we kind of like pause for the week and not necessarily go higher. So let me throw this in here. $2. Let me get this in everybody's account. 9732. All right. So just give me 60 seconds to get these in. Oh yeah, I'm gonna take it, but I'm going after $2 instead of the 50 cents that it's filling for now.
So it would have to just basically be on the money then.
Pretty much. I basically I'm taking the trade like to get pinned and filled kind of at the same time. So that's the goal, I guess. And it's probably a low probability trade.
Why not for today?
What's that? Why not for today?
Yeah.
Oh wait. This is for no, the wrong one. Sorry. I don't want to do it for today. I want to do it for tomorrow. Right?
I don't know. I was saying
gonna do it. There's no way this is gonna be filled today, dude. There's no way. This is a well, I guess this is 7. I don't know. I don't think we're at the gap today. I don't think we're going up. What would be the percent move if we're gonna? There's no way. I would take the trade for tomorrow.
When was last Thursday?
Hang on, I'm gonna cancel this order.
So last Thursday we went up 4% again. Not saying that's gonna happen this time, but
yeah,
we're at like 1.8%. So I mean, we could definitely go another 1.8% on the day.
I know we could. This market can do whatever it wants, dude. I'm just trying to make some trades. Let's see. This one is not filled. Okay, so let me check out tomorrow's expiration. So today, I just don't think it's going to take. So we have an AM. Oh, you know what? I don't even have a fudge. I don't even have a PM end of day expiration on the NDX. That's interesting. Let me see. Well, that's a 0. I mean, I don't know. I doubt this is going to get filled, but let's try the same thing. So if I did clear this, put in my call spread. Let's go a little bit longer. So I go 19.5. So 19.5.
Honestly, I don't think you should take this trade.
I don't think I'm going to, but it's offering $1.55 right now. But it's an AM position, which usually like open interest and fills are a little sloppy. This is also outside the expected move. And an AM expiration, if we gap higher, like I'm screwed on the trade. So that doesn't give it time to settle in at all. And this is around that expected move. Let's see if we're at 19.5. So 19,550 would be from current price around another 0.7. Honestly, I see this one, Frank. See this gap, dude? Like we have that high from Thursday, but I see this gap right here. That's probably more so where I would be put. If I'm going to take a second look at this, that is possibly a target that the bulls can come and take out because we can fill this gap. But if I put it up to here, that's around 19.8. That's obviously further out. That I'd be willing to take that trade. Do like a 19.8 pin price. That's a 2% move. I'm going to take that trade. I'm going to put it at 19.8 instead of 19,550.
What if you did tomorrow AM is
Okay.
when it expires, and you did 1920 put, you buy 1910, you sell put 1890 18990 is where you buy the next put. That says 30 cents.
Tell
But
me those. What's that again? You're doing a broken wing?
yeah, but it's a put.
So
It's
you want
below-
to put it
it's
below
at,
price.
It's at today's open, yesterday's close.
All right, give me the strikes
they-
again. So you're doing a put. You're gonna do a long put butterfly.
Yeah,
Okay, tell me the strikes again.
1920.
19,200.
No, 19,020.
Okay, 19,020. Okay. All right. It's way down here. 19,020.
Then 19,010 is where you sell the put.
Okay, so you want to sell. So you want to pin the 19,010.
Yeah.
And 20, and then skip to 18,990. Is that right?
Mm-hmm.
Okay, so 40 cents. This is about a 97% chance of profit. I mean, you get 35, 40 cents on it, but again, the problem is that's such a low credit for that type of risk. So I would probably put this up to like $1, probably $1.50 to $2 a credit. If you're going to take this trade, I like the trade, but I would want to go way higher on the expected tail credit. I'm not taking this thing for 30, 40 cents.
I'm just thinking that today is not going to give us an opportunity for much if we do puts.
Correct.
And if we're just going out one day, I don't think tomorrow's going to be a gap low or anything.
Yeah, I think
So,
this. Well,
I think we have more. It's more of a threat to the upside if you were to take a broken wing, in my opinion.
Well, I mean, I don't mind it. Like I said, dude, if I got filled at like 2 to 250, I don't mind the trade because it's not risking a ton. Like I'm comfortable with that risk. If I pin that price and we go another, I mean, we have to go another 2 1/3, 2.5%, which I'm not saying that we can't do that. But we don't really. Do we have any major news Friday?
Nope.
I don't think we do, right? No major news tomorrow.
We're done.
Okay, so tomorrow is nothing. We have sentiment, which I'm sure is going to swing in a crazy different way of like, hey, everyone's bullish again. But okay, so if I did this trade, I'd probably put like $1. I'd probably put 2 to 250 on this one if I did the broken wing butterfly with calls. If I did this one, I'd probably go after like $1 to $1.50 on this one. And that would be a dump of from yesterday's close. We'd have to drop about 2% in order for that to be. So we'd have to go up either 2 1/3% or down 2% in order for those to play out. But obviously, price has to do something to get filled, and that's the other issue. Is maybe price doesn't do anything to get filled, right? How do we get filled in this one? Well, price has to go up for the rest of the day to get filled. How do we get filled in this one? Price has to go down and maybe come and sniff this gap out for that to get filled. So I think if I put the trades in now pending, neither one is going to get filled.
Or you could put them in now. I'm not saying to do this, but what if you put them in now and it was like 30 cents both ways and you had both going? So it'd just be 60% or 60 cents by tomorrow morning.
Because that's $2,000 of risk, dude. That's why. If I'm wrong, like if it blows through the high or blows through the lows, I'm risking $970 a trade. That's why I wouldn't take that trade. So if I ask for $2 on the upside or $1 on the downs, those are, I can stomach risking, $7, $6, but not $9.50, $9.60 per trade. I'm
I
actually,
feel like you have to go way out of the money if you want to be right.
well, I mean, they are out of the money right now. It's like the probability on both of these, like, dude, this is a 97% chance of profit. With the one that you just said, the 19010, that's a 97%er. Like, that's way out of the money, right? But the fill is just, it's just so low. So again, I don't love the AM expiration, so I would even take this one step further and go out to the 19th, which is Monday, and do the same trade. Monday is usually not a big crazy day. It's usually fairly contained and pretty range bound. So could Monday be, if I did the put butterfly, we probably could see that it's trading. It's maybe within the expected move. So there's your night. Look at this. A 400. This is crazy, dude. I mean, the implied volatility right now in the NDX is about a 430 point move on the day. By the time we get to Monday, we've maybe gone, 4 to 6. I mean, I don't know. We're getting a lot of IV movement here. So 19.1. Move this up. So 19.1, 19.02. Skip the strike. Right now, they're trading for $1.10. But the problem here is now is we go from a 97% chance of profit to 88%. And as of tomorrow's movement, tomorrow's pricing, this obviously changes a little bit. So this is something. So how about this, dude? I don't love the AM expiration for tomorrow for NDX, so I'm probably not going to take the trade. But I will look. I think if you and I jump on tomorrow, I would like to look at Monday's expiration, and that way just have the market kind of digest some price action tomorrow, and then maybe look at something where we can pin the NDX on Monday morning or Monday afternoon. Try to get it out of the way, see what the fills look like. Get the weekend so you get a little bit of time decay, and maybe we can get like that $1.50 to $2. I don't know. There's my thoughts versus looking for tomorrow.
Okay.
Thoughts.
Yeah.
So I think we can circle back on this tomorrow. Do we not have? I think I saw earlier Nick's not in the show. So are we good? Can we go maybe a few more minutes? You have anything else you want to talk
we can
about?
keep going for a little.
Okay. You mean you're willing to go a little bit longer in a live session?
Yeah, just this once.
Just this once. Okay. Well, let's cherish this, everybody. Frank's sticking around for a few extra minutes. Okay. What do you want to look at, dude?
I don't know if this could be too risky, but I took an out of the money vertical on SMH. It was $1.80, so I thought it was cheap enough for how much I want to risk.
Okay.
But the legs are, it's 242.5 is where I bought a call.
Okay.
And then
what's the expiration for this?
where it sold.
What's the expiration? Tomorrow. 240-250. You bought the call. Okay. And then what was the sell call?
250.
250.
So it's not gonna reach it, but I was thinking if it's only $1.80,
yeah,
it's got to go.
Dude, you're up. I mean, you're up 90 cents right now, bro. That's 50% gain. I mean, going into tomorrow, I don't know. If I'm in that trade, Frank, I'm taking profit today.
Yeah, I probably should. I'm up 40%, so I think that's probably what it's gonna give me.
I think so. I mean, because tomorrow, all it's going to do is, if it doesn't go higher tomorrow, you're just going to lose value on what you have today because you still have a little bit of time premium left in it for tomorrow's expiration, and you're up, 40+% of the position. I think that's a good trade just to take the profit. If I'm in the trade, I'm taking profit today. I think that's good enough.
Yeah, I still hesitate with the daily closes, like day trades.
Oh, right. I mean, so if you took it off today, is that going to count? Or I thought you took the trade earlier. Did you take it? When did you take it?
This morning.
Oh, okay.
I mean, I have 3.
Well, dude, I mean, tomorrow's Friday, bro. I mean, it's like tomorrow's Friday. You can't hit the pattern day trading rule when you only have one day left to trade, right?
Well, I can't.
You're going nuts tomorrow.
I'm not going to take. I like having the 3 day trades because you never really know. And I was like, if I lose $180, it's fine for this week because a lot of things have been going well. So it's kind of it's a little risky, but it's not like, I don't think I would be hurt if this happened.
Okay.
So I'm doing that.
What just happened?
We're already up 3% today. So like the move to 250 is about another 3-4%.
Frank, I just got filled on a profit here. I'm just making sure I've got some
yeah?
working order. Let me check one thing here. So I've got a 573. This should be getting filled. So this one's still working. I'll talk about the trade in just a moment. It was reverse iron condor that I did, but it was out of the money. I did like the 550 long call by 560, and I was trying to grab $1 from yesterday. This one is still working. That filled. This one, hang on a second. So this one's still working at 5. I mean, why the hell is this not taking my profit? 570. Let's go 572. Filled. Okay, I'm just gonna get out of this trade for it's around $1. I've got a couple contracts in here. This one filled, so this one should be all zeros. Yep. This one here, pending, still working. Replace. Go to 572. They should fill. No problem. All right, I'm gonna take. It's just under $1. I'm making like exactly $1 or like 99 cents on the trade. This one working. Replace to filled. All right, cool. I'm just gonna get out of this trade real quick, and I'll talk about what it is. So this one filled. Let me check. Pending 572. Filled. Very nice. And here, 2 more accounts. Easy peasy. And last but not least,
What was the trade that filled?
I'll show you. So I'm just going to make sure all these positions are filled. So I'm going to make sure these are zeroed out. So those are all zeros. Those are all zeros. Those are zeros. 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 Zeros and zeros. Okay. So the trade was this. So on my software here, I noted yesterday that I was watching a 5. I had 2 big gamma levels on here. So when yesterday was trading, I had a 550 that was, let me make this a little bit thicker. So the 550 yesterday was really lit up when price was down here, and so was the 535. So what I did is I did a 550 by 560 call. So this is the long call, and this is the short call.
Okay.
And then I did a 535 by 525. Oops, 525.
Oh, is this like an iron condor kind of?
Yeah, but it's much wider than usual, right?
And you wouldn't realize any of it until it really moved out of there.
That is correct. So what I did, so I took the trade for $4.70, and today it's trading for $5.70. I was in 2 contracts. I'm just going to take the profit, because as we're getting this run to the upside, you know, what's happening is my deltas are changing on the sell side, that it's not giving me the realized gains until later towards expiration, which was going to be out towards the end of the month. So I'm taking the profit today. You know, it's a 21% gain in a day. I'm going to take that versus now price has to keep going up and keep cooperating. If price comes back into that dead zone between 535 and 550, to me, that gives me no money. So I'm just going to take the profit. So it was
a really good trade.
It was a wider trade. What I should have done, in all honesty, was pay a little bit more for it and just let the upside with the trading it here. If I did the 550 call
Even if
only,
you kept your calls or your buys like close to the money.
well, if I just did the out of the monies and didn't sell it, if I just did this, I would have been able to close it out first thing this morning, because it went from, I mean, this was trading for like $2 yesterday, and it's trading for $6 today.
That would have been expensive though.
It would have been. That's why I didn't take the trade. That's why I sold the 560 and I sold the 525, because it only cost me $4, 4 and change to take the trade. So anyway, I'm just happy. Like that's one trade that's out, and then I have another one here. I'm still running with a 555 call right now for my account, which might be up. If it's up like 50 cents, I might just take the profit. Let me check something real quick. So here, SPY, I'm up $20. I don't know. I might just take the profit. Let me see if I can get out of here for like 70 cents. Well, actually, you know what? I'm gonna do. I'm gonna take a page out of Nick's playbook and just move my stop loss. How's that? So here,
Trailing stops.
what's that?
Trailing stops.
Exactly. So I got in for 46 cents. I'm going to put in a stop market. I'll do a stop market this time, and I'm going to put my stop loss in at, let's do 50 cents. Review. Already closing. Oh, yeah. So I've got this one at $2. Let me just replace this one. So this will be a stop market at 50 cents. That way it's risk-free. So if the trade just wants to keep grinding higher, then maybe this becomes, 75, 80, 90 cents. I was willing to take profit around $1, get 100% gain on the day if it's going to drift higher. But now it's break even, so there's no loss in that trade. I'm going to check one more with you while we got a few more minutes. So I've got another trade on the SPY. This one is out to September 30th, which this is the one that you and I talked about on Monday, the 537 by 557. Right now we're trading at 551. So there's still a little bit more upside here, but 553 is my break even. So right now, I bought the thing for 1640. It's trading for 1690. So obviously I'm not going to close it yet. But I will be watching this one very carefully to see if we end up stretching towards like a break even or better. I've got plenty of time premium left in the trade, but I guess we're looking to see like how big and important that Thursday, August 1st high is going to be and how significant it is for the market. So anyway, there's time in that one, and that's also going both ways. So I'm good on that one. And then I've got ratio spread on the SPY. That is a, what's this? That's a naked put. And then the 465 by 400. That's a sell, but that's a wide credit spread for some credit there. October 31st. And the 5, that's a hedge. So I've got hedges there. Took the profit today. I've got the reverse iron condor out to end of September. So I think I'm good, man. I mean, I'm up 23 grand on the day. That's pretty good. And
Yeah,
hopefully there's more to.
That is
more to
really
go.
good.
Yeah. So, all right, man. What else you want to talk about? Anything else? We got a few more minutes. I'm good for another 10. Let's go right into one of the session.
I don't necessarily have anything else I'm looking at.
Okay.
What have we not talked about, I guess?
Well, let's see. Oh my gosh, is this right? Is Alibaba back? You son of a gun. So I took a trade on Alibaba, 82.50 by 80. Man, freaking China just can't get out of its own way, dude. It's killing me. So Alibaba was up to $82 and it's fading. I mean, I'm just watching this one closely. I wonder. I wonder this. If the dollar gets weaker, this is kind of a bigger picture talk, but if the dollar gets weaker and the Fed's going in a cut cycle, one thing I think we need to look at is the dollar versus the yuan, because right now, what is happening? Okay, right now, the yuan is showing some strength, the dollar is showing some weakness, but I don't think this is really dollar influence. I think this is mostly the Chinese yuan getting a little bit stronger. I do wonder if the dollar gets weaker, if this, I mean, I do think there's a lot of manipulation in the Chinese yuan, along with what we do with the Fed, and all these central banks are doing crazy stuff. But I wonder if a weaker dollar is going to change the, import-export game for China, if it helps the economy a little bit. China has been, to me, technically one of the better markets to look at, but man, it is just not confirming anything. So if you look at FXI, I mean, technically speaking, I really do like this trade. So from a weekly chart, we're back to levels we haven't seen since 2008, which is why I'm long FXI. The problem is we're just not getting the follow through. Now, this is another one that I'm willing to own this ETF. I've repaired it a little bit. I think I've got ones out to the end of August. So I think I own the shares. Let me 2650 is what I have right now. FXI, so I own the shares. I'm trying to get a call away at 2650 to repair, because I'm just not confident yet that China's ready to rip. But man, I do want to watch this closely, because if this is going to show some promise, going from 25 back to 32.50 is a decent little gain. And if I'm right on this as a double bottom, that low to high, measure that move. I already got the box right there. If I buy this thing, Frank, at 25.75, my measured move on this is out to 45 and change. So I mean, I don't know a lot of stocks right now that I could look at. I don't know an index in the US right now that I could look at and say, I'm confident we have an 80% move higher. There's not a lot of stocks in the US I can say that about, right? Like, unless you're buying garbage and be like, what about GameStop? No thanks. You know, I mean, 80+%. I don't see that in a lot of major liquid stocks that have already been just ripping since 2023.
You don't see the value in GameStop? They're no longer a video game company. They're a technology company.
I bet they are. I mean, look, if they stay in business, I can get a free PS5 controller. So good for me. Other
Yeah.
than that, I don't give a crap about GameStop, and I think the whole thing is stupid.
Yeah, it's a bunch
And
of
I
trash.
never want to chase it. I look, I was long GameStop around $17, and I got out well before brokers were closing up and Robinhood wouldn't let anybody in. You can only sell your positions and all that drama. So I don't know. I had a little intuition that something fishy was going on in the background, and when they started locking people up at $480 and you can only sell it, and what a crazy, again, crazy stupid story, kind of like what we had on August 5th. But anyway, my point is Alibaba, I'm willing to own some shares. I own some shares right now of Baidu, which is hanging in there around 85. You can see I've got some positions when I'm typing all this stuff up on my charts, but I own the shares right now at 92, and I'm not trying to get in the way of it, because this is another one. If we start to see something good happen here, we've got some lows. This even coming back to the same highs around 160. We're trading at $85, dude. I mean, that's nearly 100% upside. Yes, I want to be in the stock. Yes, I want to own this thing, and yes, I will repair it if I have to. But I do like the stock, and maybe if anybody's watching this, it's like there's no confirmation to be long, and maybe I'm way too early. But if I'm right on this in any way, shape, or form, this is where some serious alpha is going to be sitting. So maybe it's not just gold, maybe it's not just Bitcoin. But man, I think if there's any type of inflow into non-US, I do think China could be a big beneficiary the next maybe a couple of years. I did take a position in EWZ. I don't know if you and I talked about it this week, but this is Brazil. This is an ETF on Brazil. If you look at the historical performance on EWZ, this one tends to perform very, very well during U.S. recessions. So I'm early, but we're also talking about levels that here's your 2008 crisis. We're sitting right at those levels. So I'm not saying the U.S. is going into recession, but I think it's more probable than not that give us 2 years, I think something's going to break in the U.S. Give us until the end of next year, something's going to break in the U.S. I don't think that we're on a sustainable path right now. I just don't. That's my personal opinion. I think we're gonna have to have some type of reality check, because we have had more booms and busts in the last 6 years of trading than I've seen since. I mean, I understand 2000, 2001 crash, recession, nasty .com burst, tech bubble burst, 2008 brink of financial collapse. Okay, fine. 2020, like ever since 2018, dude, this market's been like bulls pop, all these bubbles, it's like it's nuts what the market's been doing. And I don't know. I'm not that confident in the US's ability to maintain, $35 trillion in debt and having some type of likely fiscal crisis where we can't buy our way out of everything. We can't print our way out of everything. And I think it's more and more apparent that people don't want US treasuries when they want to have gold and other assets. So that's maybe some doom and gloom, but it's just a reality check that I don't think the US can run hot forever. I think that consumerism at 70+% of our GDP. If people are feeling the pinch and they're going to slow down and start only buying what they need instead of what they want, that changes the dynamics of our economy. And also,
so that's why you're looking to China and Brazil.
I'm looking for China. I'm looking for Brazil. I'm looking for energy. I'm looking for value. I'm looking for dividend stocks. I'm looking for stuff that's just done nothing. I'm looking for commodities.
What about India?
India. So I don't know what the main India ETF is. I know it's out there. It's already had a pretty good run. Is it just Indy? That's
I'm
the
not
top.
really sure.
So it's the Nifty 50 was good until it crashed. But there's the Indy, which is
INDA.
IND. There's INDA. There's IND. So this is a MSCI one. I'll just try this one, just Indy itself. Why would I not buy Indy right now? Because it's sitting here near these highs that we haven't seen since 2010. So China sitting near like 2008 lows. Indy sitting near these highs. Anyway, that's why I'm not in India, because it's already at highs. We've had a big run in like some other smaller stocks, like Venezuela's up a ton, Argentina's up a ton. I'm not really in that. That's not my space. Like non-US to me is okay. So consumer staples, right? And being pretty defensive, maybe utilities, maybe industrials. But you don't really make money in those in the US when we have a downturn. You just don't lose money. You know, they can maybe outperform, but outperforming, here's the difference. Are you outperforming if you own stocks that do this and the rest of the market does this? You're outperforming, but you're not making money, right? So what I'd be looking for is I'm looking for something that can actually go up as we go flat or we go down. So
It seems like all of the stock markets are basically correlated.
they definitely are. I mean, how much? I guess I look at it this way: can China get worse? Yeah, it can get way worse. But if I own an index at $25, and I take it to zero, okay, so I'd probably buy 100 shares, couple hundred shares. I'll work it. I'll trade. Look, I'll trade FXI like I'm trading the SPY, but instead of being $560, it's $25. So my dollar cost averaging on that is a little bit different because I'm not starting out huge, but the ability to not tie up 50 grand or 25 grand in margin, it just gives me a better starting point with what technically looks like a much better opportunity. And I just keep going back to these levels where it's like, we are back down to the same horrible lows we were at in 2008. And I get it, man. Like China, nobody knows if it's real. Nobody knows if all the bookkeeping is accurate. You don't know. But I do think that China is playing the long game with being number one in the world, and I don't think they're going to let their economy crumble. I don't. I mean, I think the U.S. needs China. I think they need us. I think they need us to buy everything. I think we need them to make everything.
I think you're right.
So
I
I
think
just
it's going to take a lot of time. Like you
Well,
never know when things can turn around for it. So you could just
Sure.
be stuck in it for a while. But
I could be.
think you're right.
But here's what I'll say. If I'm looking at this, just let's talk investing for a second, which means I'm gonna have to have a horizon of maybe 3 to 5 to 10 years. If over the next 3 to 5 to 10 years, I own a stock at $20 that my price target's up here at $50, there's money to be made, right? That's it. Like if I look at this stock or index or this whatever, if it's 100% just in the ownership of the ETF, great. But if I can do options on top of that and I can juice this to maybe making 200% or more, fine. I mean, there's I just look at it like it's an opportunity that I'm not ignoring. I think that from the technical side, it looks promising to me that we had a rip here in early 2024. We've pulled back. We're stabilizing here on the backside of this trend line. And so, am I willing to take some shares? Yes and no. Like, do I want to own it right now? Maybe. And that could be the start of things. But I think I'd wait for a little bit more confirmation to say, okay, we got some good evidence now. Otherwise, if it just comes back and retests the lows, I will definitely get way more involved here. Easy trade for you, or for me, but sharing this with everybody. Staggered credit spreads. If we're trading here at the lows, doing at the money or in the money, and just do like 1 month, 1 month, 1 month, 1 month, 1 month, and go out like 4 or 5 months. I've done that so many times, and this ends up making like 3 to 4% gains, and all price does is go up. And so I can sit here and hold it and own the shares, but to tie up way less capital due to defined risk having small accounts, you can make really good money over like 3, 4, 5 months on one position. If it was FXI, KWeb, BABA, Baidu, across the board, I could see my account being up, 10, 15, 20% on just doing option trading.
All I can think here is
worth doing it.
If I were to do it, because I don't
Mhm.
really know too much, is buy on the way up and then keep selling calls.
Yep. Yeah. Not bad. So
But
it
if it went down, I don't really know what I would do.
If it went down,
Yeah, I don't know if I would want to pick up more if it kept going down.
yeah,
I think I would like to buy it on its way up, but you don't really know when that's going to be.
that's true. So yeah, I mean, I look at it this way, one thing you do with options, if you bought it here and you sell a call, if that call's threatened, roll it. Like roll it out, roll it up. If it gets called away, then just recenter the position and campaign it again. But like I said, the nice thing is my measurement is not just this level, but this level. So if we have a double bottom, that move is going up to the center high and up to a higher high, which puts this around, $46. So I like that potential upside. So is this, me supporting the idea that everyone needs to be in China? No, because most people I talk to, they're like, it's uninvestable. I'll never invest in China. Okay. That's your preference. But I'm looking at this as I think there's a good technical opportunity to be exposed, right? And what's crazy, and I don't know if you know this, did you know that 60% of the global market cap is US based? That's how large the US is. We're ridiculously big, dude. So yeah, I mean, if the US is starting to like struggle or go down, I mean, it's going to drag everything with it. I understand, but there could definitely be diversification there where it's not just all US, all US, all US. I mean, we're essentially a tech country now. Like our index, our stocks, S&P 500 is not 500 great diversified stocks. Like it's, 10 tech stocks and then sprinkle in some other big ones like a Berkshire Hathaway and, a Chevron and ExxonMobil. I mean, our diversification, I think, is very little compared to what it used to be with the idea of a broad market. So just because our big stocks are just ridiculously big, they're gargantuan now.
Yeah.
So, anyway, all right, we can save that whatever that conversation is. Maybe it's just like I don't know what they're talking about.
We kind of trailed off, but we were talking about other markets like China finally seeing the sun, and then Brazil.
Yeah.
But yeah, I don't know. I just don't know anything about it. I don't know much about China. I know nothing about any other country's stock market for the most part. So I just kind of stick to the US.
Stick to it. Stick-to-itiveness.
Yeah.
All right, dude. Well, hey, I think we should wrap it up here. Let's, if you want to come back and do it tomorrow, I do want to take a look at those Friday, Monday trades like we talked about for SPX, NDX. Take a look at those, maybe broken wings for Monday. And I want to see how the rest of your trades are doing. I might have a couple other profits rolling in by tomorrow. I should have SMCI for full profit. If Pfizer gets over $29, get that called away for some profit as well. So yeah, we'll take a look at stuff tomorrow. I also am pretty excited that the IWM has picked up some slack and not sucked today. So we're up on the levels. My RUT trade, I've got a pin here, some broken wings that you'd be happy with. 2050 and 2100 are my pin prices. So those are out to the 23rd and the 30th. So
nice.
All right, looking forward to do it tomorrow.
Yeah.
Let's
talk about it then.
Sounds good. Thanks, Frank.
All right.
See everybody.
Thank you. See you later.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.